Let's cross over to our Nairobi studios where Samuel Wachira, General Manager at Francis Drummond and Co is standing by to take us through activity on the market. Samuel, great to have you with us this morning. As I was saying, the energy sector really appears to have come to the fore. Of course, the discovery of oil has boosted sentiment around these stocks and boosted overall market sentiment, but it seems that foreigners are still staying away from the market. Foreign activity has eased somewhat. What is your view on these two factors?
Well, thank you very much, Samantha. Very good observation there about the recent announcements about discovery of oil in Kenya. Definitely, that would be a big boost in terms of the economy overall. But look at it in terms of the direct impact of some of the listed companies. We are looking at energy sector, just like you observed there. We are seeing Total share already beginning to rise. Kenol, Kobil also. We should expect a bit of activity on that front. And even some of the key players in the energy sector, Kenya Power and Lighting, KenGen, even TransCentury. But I guess what seemed to be coming to the forefront is that definitely, despite us being able to discover oil, there must be a lot of infrastructure as well as framework to be able to be set up before we can be able to see those benefits trickling down to the economy.
Let's just talk about Total Kenya and Kenol Kobil in the meantime, in terms of the two energy stocks on the bourse. Total Kenya rising some 10% yesterday and of course still trading on a profit warning, whilst Kenol Kobil also firmed up by 2.6%. Kenol is seen to be the company that is best positioned to take advantage in the medium term of the oil discovery. What are your views on that?
Well, definitely, the oil discovery would be a very major boost to some of these key oil marketers in Kenya, definitely because of the fact that if we look at Kenol Kobil, especially what they have been working towards in the recent past, they've been able to strategically position themselves in very key segments of the region, and also some of their plans even to expand into other segments of the region would position them very well if at all Kenya would start producing oil. Looking at it in terms of Total, it's already well placed in terms of the region, and definitely going forward in terms of how they're going to be able to perform. We are seeing even investors are beginning to see more potential in the future as opposed to what has been happening in the past. And hopefully, if at all this discovery can be able to bring in the numbers soon enough, we should be able to see some of these factors also being factored into how the shares continue trading. But definitely investors are positioning themselves to be able to take advantage of this. And I'm sure the perception is that definitely going forward, we're going to create a lot of very positive sentiments.
So basically, Samuel, would you be buying either of the two stocks on the basis that they will benefit further down the line if Kenya discovers oil in substantial quantities?
Definitely, that would be a very good buy, especially in terms of looking at it in terms of the energy sector, and even looking at it in terms of how key some of these products are in terms of the general overall performance, even of the general economy. But looking at it in terms of even how Kenya is performing, definitely looking at it in terms of the fact that oil imports controls almost 30% of our imports, definitely that would also affect in terms of other key sectors of the economy. And I would be buying into some of these energy stocks as well as petroleum.
Let's focus on the cement sector, of course, also in the infrastructure build space in East African region. Athi River Mining out with earnings, an earnings report looking at their cement sales increasing around 72% as a result of new capacity coming online at the end of 2010. What are your views on how the company has managed to translate higher cement sales into better earnings?
Well, looking at the river mining, just like you observed there, the performance is fairly good, and over 23% rise is very positive for a market like ours, especially now that last year was a very challenging year. And going forward, I guess the challenge for them is increasing their capacity, which is something that they're already trying to address. And I guess looking at it in terms of their earnings potential, they've been able to give close to 10%, 10 shillings EPS. But also look at it in terms of their dividend payout. Definitely, that points a lot to their desire to expand their capacity, and because of that, the dividend payout is not very high compared to other industry players. But definitely going forward, I think they're very well positioned to be able to still take advantage of the opportunity. Just like you observed, their desire to expand is another thing that might affect their capital structure, and so it's saying them trying to think about how they can be able to still get financing, external financing, to be able to finance some of their expansion, and hopefully they'll be well positioned to take advantage of the opportunities that are pretty high in terms of the region, especially as at now.
If it is able to issue that as a $50 million convertible loan this year successfully and use that to finance expansion, what impact would that have on their balance sheet? Is that a substantial loan?
Well, definitely. Looking at it in terms of the impact on their balance sheet, it's going to be almost, if we're to even convert it to equities, significant amount, looking at it in terms of how much they're borrowing, but also their desire not to dilute their shareholding is one of the things that they opted to be able to go for this loan. But definitely, I guess the challenge would be to ensure that their financing costs do not really affect their bottom line, and to be able to still manage their capital structure so that in the long run, they are not really shedding off too much in terms of financing to be able to still sustain their capacity to expand. But I guess their key strategy in terms of ensuring that they are very well positioned, they have a product to offer, definitely is going to be able to still try to balance out some of these costs.
Let's quickly focus on the agricultural sector. We had Lumira Tea out with earnings as well yesterday at the close of trade. 2011 pre-tax profit dropping by some 42.6% to 59.8 million shillings. That as a result of output being hit by the drought we saw last year. But going forward into 2012, it seems that the prospects for the agricultural sector are looking a little dicey. What are your thoughts on investing in the sector right now with concerns around adverse weather patterns still coming to the fore?
Well, thank you very much, Samantha. That's a good observation about Limuru Tea and the general performance of the agricultural sector. I think as an economy, we are still too much reliant on rainfall, and because of that, it's really affecting and pulling down some of the agricultural stocks in terms of their performance. And I think going forward, there's something that we need to seriously address, because just like you observed, investing in some of these stocks right now is a bit of a challenge, because the forecast that we are getting is that the rains might not come as strongly as they did previously, and also just like we're already seeing some of the numbers that are coming through, that is not really favoring them. And also look at it in terms of the behavior of the shilling. Last year, despite the weakening of the shilling, they were still not able to report very strong earnings. And going forward with the stability we are seeing in the foreign exchange market, definitely that's going to be a concern for them.